Good morning, everybody. Saturday, September 3rd. Wanted to get a quick video out to you all because you were asking me about lines. Specifically, I was talking in the channel about 392.55. I said 392.55. We got down here and we broke it, and I thought, oh good, they're not going to bounce, but then they did. Came back down into it and they did bounce, so we cut our puts, but that's okay. Then we came up, it became resistance, came down. Look at this beautiful bounce off this line. Anyway, so everybody says, what strategy do I use? Where do I get my lines from? It's not a technical indicator, it's just lines. And in the mornings, I've been recently posting, here's where you need to put your lines, and the lines work. So I want to explain where I get those from. So we'll start fresh real quick, and then I'm going to go over to another portion here. You're going to hear my fan spool up, but oh well. I want to talk also about candles, what a candle is, what it means, what it tells us, on the most basic way I can think of explaining it. So let's start new. Normally, when somebody is new to charting, you're going to want to find areas of support and resistance so you know where to buy the dip. So for example, right here, you'd say this is a low, so you'd put a line there, right? This is what normal traders do. Here's a line here, we'll put a line there. We'll say, oh, here's a peak, so obviously that's important, so we'll put a line there, right? So we got lines, and for most of the time this works. So like right here, you've got over here on the left, you'll see we bounce there, so we're probably going to bounce there also. Same thing with down here, we bounced twice here, so we're likely going to bounce again when we get to that area. That is because, now this, don't get too carried away, this is not how I chart, I'm just telling you how normal people chart. So normally, there's a guy that says, when QQQ gets below 270, I think it's on sale, and I'm going to buy it. So if it gets below 270, I'm going to buy more of it. If it gets below 270, I think that's a good deal. I'm going to buy more of it, right? So that's kind of what we do. When I say our numbers, or where to put the lines, it's a little bit more detailed than that. So we zoom in on intraday, and we use something called tail candles and inside day candles, mostly just tail candles. So keeping that same theory in mind, when it gets to a certain price, somebody thinks it's a good deal, they're going to buy it. Just like when you go to the store to buy, like what I'm going to talk about here in a second, if you have a kid and you're looking for a Buzz Lightyear toy, and you see one and the retail price is $100, and you see one on sale for $90, you're going to buy it because you think you're getting a good deal. That's the same thing as the market. When shares of Apple are below $150, people think that's a good deal, so they're going to buy it. Same exact philosophy. Now we can use candles here to understand where people think it's a good idea or a good deal. And we notice that with bottoming tails or topping tails when we are looking the other direction here. But these tails right here, they mean something. They mean people are buying and pushing the market back up, right? They're pushing the market back up. Right here, we closed at the low of day. Nobody was buying it right here. They were waiting until it got down here to buy it, and then they would push it back up. The next day, the market fell. They didn't want to buy it. They wanted to buy it around here. Fell again. They didn't waited until it got down here, and then they bought it back up. Yesterday we got back down there to 390 again on SPY, and it bounced. They bought it back up. They think 390 is a good deal. So instead of putting a line at the bottom of your peaks and valleys like this, instead of doing that, we put them at the bottom of the bottoming tails, and then we're going to go intraday even more. And then you can start looking left and you notice something. This right here is important. It's a green reversal candle with a bottoming tail. That means it sold all the way off, and buyers thought it was such a good deal they bought it up past where they opened, and it closed green. If you look left, you have a pivot right here and a pivot right here. So you know that 296.59 is an order to buy the market. That when it gets below that number, banks are triggered into buying shares of QQQ. Now that's on the daily chart, right? So let's see. Say 269.59. We'll just make it round. Usually they're round numbers, so like 270. But anyway, I can't figure out my tools again. Coordinates. Let's say 269.60 is probably where it is. So that's probably what their order is. So when it gets to that number, the computer says buy, and it goes back up. Down here it was a little weaker. So the fact that they got to that price again, some of the people canceled their orders, the buy orders. They said, I don't like where this is going. It's back here already after day 2. I think I'm going to cancel my order. So there were less buyers on this day than there were on this day. So it dropped below that number. It still got pushed up. So there are still some buyers in this area, right? So let's zoom in on smaller candles, on smaller time frames, and see what else we can find. So 4-hour charts. Really, the buying was right here. This is where the major buying was. So you've got buyers here at pre-market. They're like, I think this is a good deal. 296.60. We'll make this one 293.50. These are real numbers. Put this on your charts if you want to play QQQ tomorrow. When it gets below 293.50, the computers buy the QQQ. Look at this. Came back into it, 293.50 the next day. Boom, the computers hit. Right? Watch this. I haven't even done this before. Watch this. Oh my gosh. 293.50. Boom. There's a huge buy order right there. Let's keep going. 293.50. Oh, look at this. There's buyers there. These people bought it all the way up here. Now we got below 293.50 in the morning. These buyers did not get filled. So what happened? Boom, it dropped. Right? Same idea here. Opened the day before. This is pre-market, right? 293.50. Boom. There were no buyers. It's not that there were necessarily as many sellers, because if you look at volume, there's really no increase in volume at all right here. There's no difference, right? But the buyers didn't, their computers didn't buy for them. There was nobody. Let's keep going back just to see. Oh my gosh, May of 2022, 293.50. Look how many times. When it got above it, people wanted to sell it. When it got above it, people wanted to sell. When it got above, people wanted to sell. Let's keep going. Oh, too far. Where was that? That was in May. April. Oh, we're going to have to go back to 2021. But watch this. I've never done this before. I'm doing this real time with you guys. That's why I have to scroll, because I have no idea the last time we were at 293.50. Oh, hey, by the way, look at where the buy order is today. 293.52. So actually, you can get 2 cents closer and say on Friday night there is a buy order at 293.52. So really you could change your line. I promise you I've never done this before. I don't trade QQQ very often. 293.52. Okay, that's where our new line is. Put that line on your chart. Let's keep going back to 2021. Here we go. Oh my gosh. 293.52, people were selling there. What do you know? 293.52, sellers were there. So what does that mean? Does that mean this line's support? Not necessarily. It means it's important that a major bank, Bank of America, is sitting right here. Right? That is the person you want to trade with. You don't want to trade with Wall Street Bets. You don't want to trade with any of us in Jake the Stock Guy group or any of the Twitter people. You want to trade with Bank of America. So what do? Let's go back to the future here. Say 293.52 is clearly an important number. How's that going to affect our future? Well, man, we've crashed a lot in the last year. 293.52. So what does that tell us? It says either what did I say, 293.52? We hit that, and bam, Friday, shot back up. So what does that tell us? Two things. One, if we open up here on Monday and we come down to it, what do you think is going to happen? Buyers. Two, if we open down here on Monday and we come up to it, all these people are now going to be sellers. Bam. What do I always say? Prior support becomes resistance, because they're buying up QQQ at 293.52, and if it's below that, then they don't want it anymore. That is their stop loss. Their stop loss is their entry. So if we open below that and we come back up to it, the expectation is to sell off. It's also possible we open below it and we just sell off because these buyers aren't here. They're up here. They're not down here. They're not going to buy it down here. They're going to buy it at 293.52. It's also possible we can break it, come back down to it, and then they'll say, yeah, let's get back in it, and they'll rocket ride. So put that line on your chart, 293.52. Let's go back and look at SPY, and I've got my millions of lines on it. But same exact thing. This is where I get the lines. I said 397.10 was get out line. Now, I mean, we have patterns and stuff too, right? You've got a bear flag right here, and when they broke the bear flag, the market just fell apart. But that's just patterns. Banks don't care about patterns. They care about prices. So for them, 390.89 or probably 390.90, it got below it, they bought it back up. It got to it, they bought it back up. Bought it back up. Bought it back up enough that finally it just took off. So the expectation is when they come back to it, below it, it'll get bought back up, right? Especially look at this volume. That's banks buying. That's not Wall Street Bets buying, right? You can even go back left on this one, and you could say, okay, back in July 26th, they were buying it enough to stop the crash. They bought it up here, and then they bought it up here again, and it just took off, right? So Now you mix that with the trend lines that we talked about, the patterns, because now you've got retail trading patterns and you've got banks buying it at a price. Here's the expectation. We open below 390.89, or probably 390. Open below that, what happens? There's no buyers. Bank of America is not buying down here. They were buying it up here. Their orders are not getting filled. There's no buyers here, and retail just got their stop losses hit because we broke the trend line, and that's why I'm talking about we could have a major crash. The other option is we had an important price meet right here and took off, came back down into another important price, and let's say, why did that bounce right there? Well, we can click right there and say that bounced. Well, it bounced right here too. Somebody pushed the market back up. Got underneath here, it ripped. Got under here, it ripped. So it just so happens, because there are so many coincidences in the world, that right here, it ripped when it got, and then it created a trend line. From here to here, that's now a retail trend line. Is it possible that coincidences happen also, that when they get to 390, it just so happens to coincide with this trend line, and you have a major rip your face off rally because you have retail traders buying the dip and you have banks getting their orders filled at 390, and we just absolutely rip. That's totally possible too. But anyway, that's where I get my lines. Start on the daily, look at the bottoming tails right here. Here's a bottoming tail. Put a line at the bottom of it, and then zero down on 4 hour, 1 hour, 15 minute, and just keep following those bottoming tails, and that's where your lines are going to be. That's where the banks are sitting, and they're going to push the market in a certain direction. So I talked about bottoming tails. You also have like solid candles like this, right? So let's do this. How candles work. Yes. Buzz Lightyear. All right. So, can I not draw on here? All right. So let's say you got Buzz Lightyear here. And he is on sale. The price, the going price, is $100 at the store. So you put a dot at somebody buys one for the market price, the fair value price of $100. I don't know how much these things go for. I'm just making this up. So you have fair market here. This one is now sold, and you've got some options. So you can go down to the Dollar Tree and buy one for $95, or you can go to Target and buy one for $105. This would be the Walmart price, right? You can go to Target and go to $105. So let's say somebody bought one at $105 also. Let's say you're the same person and you need 4 of them, okay, for this. So you've now sold one for 100 and sold one for 105. Now you've got this big gap between 110 and $95. You're like, that's weird. Why is there one for 95 bucks? Maybe this one is junk. I don't want that one. So I better spend the extra money at Nordstrom's, because they totally sell toys, for $110, right? So now you have, these are all sold up. It's just as if this is completely fictitious, right? So you have 3 purchases, right? Actually, what I should have done is this: 100, 105, 110, right? This is exactly how stocks move. Let's say this was a share of Apple. Share of Apple for $100. at 8 o'clock. A share for Apple sold at $105 at 8:01. And a share for Apple sold at $110 at 8:02. Like, let's say this was a chart, right? So that's what it would look like. So candles, that's how stocks move. So let's stay with this one for now. So now let's find out. So these three are sold, right? These three are sold. And somebody says, well, these people are out. I'm going to take a risk and buy this one at 95, even though I'm not sure about it. But, or then somebody else might say, oh, actually, that's a really good discount. I'm going to buy that. So then the 95 gets sold. Now you can kind of see the movement of a chart, right? And then this guy that sold his for 100, or that bought his for 110, he's like, oh man, these things are only going for $95 now. These obviously aren't worth the money, so I'm gonna sell mine. So he lists his for 95 now. Say his is for sale. Says, I don't want it anymore. I want it for 95. Somebody else buys it for 95. And then you've created a capitalist market system where these people are like, well, crap, these things are losing value. I'm going to sell mine at 90. I just want to get out of this thing, right? So now we have a purchase at 90. This guy who originally bought his at 100 says, oh, there's 3 more on sale. I'm going to buy 3 more. So it jumps back to 100, right? And that's how so that's what a chart is. A chart is a representation of people's buying philosophies, buying habits. Do they want it? They want it really bad. They're willing to pay more. Do they not want it anymore? They're willing to sell it for cheap, right? So that's a basic chart. Now let's go to candles. We'll stick with green here. So we have a guy bought one at $100, and then he wanted them really bad, right? So he wanted 3 of them, and he just wants them. He doesn't care what the price is. He wants one for 100, he wants one for 105, and he wants one for 110. He wants all 3 of them. So that's a solid green candle, right? Next guy comes in and he says, I'm going to sell 2 of them. I'm going to sell my 110 and my 105 for $105. I'm going to sell both of them, or the same guy, whatever, is selling them now. He's trading them. So he sells his 110 and his 105 at the same time. That makes a solid candle. This is kind of hard to do with just 4, but stick with me. And then this guy who's got them for 95 and 100, they're like, well, heck, now ours are worth at least 105, but I know the demand is high, so I'm going to list them for just as much as people are willing to pay. So then you got people scrambling to buy them. Say, I'll pay 105, 110, 115, 120, 130. I don't care. I just want it. You get solid movement. That's how candles work. Usually on a market order, there's a list like this in stocks of Apple. You have a share at 95, 100, 105, 110. And if you want 4 shares, you buy all 4 of them at that price. That's what makes the candle. Now let's say you've got 2 or 3 people arguing at the same time. This is going to be a little harder to do on this. But they're going to come to an agreed price. Let's say they're coming to an agreed price here. So these people want these, and the guy says, well, I want some for 140, I want some for 140, but this guy's saying, no, I'm gonna sell mine at 130 because I don't want it anymore. So you've got a candle here, right? This is supposed to be the same kind of candle as these. But then somebody comes in and says, I want to sell mine for 125. And someone immediately says, but I'll pay you 130 for it. It shoots back up. That's what a bottoming tail is. That every time Buzz Lightyear drops below $130, somebody's going to buy it for $130. They don't care what the actual price is. They're willing to pay $130. And that's what a bottoming tail is. Every time it drops below 130, they're going to buy it right back up. Same thing with a selling candle. This guy who paid 100 for his, every time it gets above 140, I know I'm making my candles bigger, but anyway, just imagine this is a candle. Every time it gets above 140, he's going to sell his. So it pops up to 150. He sold it to a guy for 150, and then he sells one. And it goes back to 140. And this would be the average price, 140, right? People under here, they still want to buy them, so they're willing to pay for them. But when it gets to 140, he's going to sell it no matter what. Somebody's willing to pay 150, it'll pop up. He doesn't care. He's going to sell it at 140. He's going to keep coming back down. And that's what a topping tail is. I know that's really stupid, but that's the only way I can understand it. Is somebody buys one at $100, that one's off the market. Now people can choose. Do I think it's on sale? I'll buy it for $95. Do I think it's really worth it? I'll buy it for $105. Say, yeah, I want to buy that one. So that one's off the market now. Come up here, this one's off the market now, right? And that's why candles move, because people want them bad enough. They don't care what the price is, they just want in. Topping tails and bottoming tails is when a stock goes below a certain price, they automatically buy it back up. When it gets above a certain price, they automatically sell. I hope that clears things up for you. Hopefully it didn't make it more confusing. But anyway, let me know what other questions you guys have. Appreciate it.